I'm excited to make this analysis today because I got a new book. I'm going to hold these up. This one here on my left is Chart Patterns by Thomas Bulkowski, and it is absolutely a fantastic resource. And I recently picked up this book on Elliott wave analysis as well, which Bulkowski recommends. And I have to tell you, I've only read the first 26 pages, and my mind is already teeming with ideas. So I'm going to go ahead and open the charts. Let's get going. I have Bulkowski's website, thepatternsight.com, open above me, and you can see this is where he recommends the book. And I wanted to start by looking at this pennant that I identified and left with on Friday. You can see that we are in an overall uptrend, and the price has been a consolidation, and it looks like there's still some room in this pennant for some more downside action before a breakout one way or the other. And a break to the downside actually could be a false pullback or a false breakout. We see a pullback once the price reaches this uptrend. That's very possible. I don't think we're going to go that low, but I do now want to add some Elliott wave analysis to this chart pattern. And I believe the combination of chart pattern analysis and Elliott wave analysis is going to improve my technical analysis by a matter of degree and magnitude, not some finite lineal step. It's going to be a big jump. I think that my analysis is already pretty good, and it's going to get much, much better. So I'm really excited. And I have to change the style of my chart a little bit because I need to use colors a little bit more when I do the Elliott wave analysis, and I want the bars to be less prominent. So I'm going to go ahead and load up my new style. All right, this is how I'm going to be charting my Elliott wave analysis. It looks a little different, and it definitely intensifies the early 2000s vibe, which is not bad. I like it. I know some of you do too. Okay, what am I looking at? This is that same pennant. And as you can see, there are just so many lines all over the place. So I'm going to start walking through what each of these is, one step at a time, starting at the beginning. So we had a bottom at $10.30, and the price rose from there. And I believe that rise was the first wave of a larger 5-wave pattern. And I'm going to dive into the subwaves here. So my hypothesis is that this move from 1030 to 16 was wave 1. And I'm going to explain how I have this shown on the chart because it is kind of hard to follow. There are going to be different amplitudes or degrees of patterns, as in this thing is fractally as get out, and keeping track of where you are in the fractal is difficult. It is difficult. So I decided to utilize Bulkowski's trend line instructions to show the waves. Instead of drawing a straight line from 1030 to the high at 1 cutting across the price, I decided to draw a solid green trend line to show the uptrend that created that first wave. And now you can see the wave, right? It's like rolling, whoosh, crests, and then falls. Very cool, very cool. Okay, so the subwaves of that first wave are all going to be shown by those trend lines, and I have them numbered where they peak and where they valley. So you see the peaks and the valleys, like wave, right? That's really what's defining where those waves are. And so I'm trying to make that easier to follow. These thicker green or thicker dashed lines, those show the overall wave, the big wave of which the subwaves aggregate into. And so I have that labeled as 1 at the very top. And so the idea is if you want to draw the wave straight, you go from number to number to number, and then I have the trend line that defines the wave shown. So I believe 10 to 16 was wave 1, and now we have a downtrend that has broken that uptrend, and I believe that downtrend is corrective wave 2, and it is composed of an ABC correction. And that ABC correction essentially looks like a measured move down. And you can see that this is shown in this red dashed line. This is wave 2, and its subwaves are here shown as 1, 2, 3, 4, 5. And so the trends here aren't as clear, obviously, but this was a precipitous drop. But 1, 2, 3, 4, 5, and then you have a 3-wave corrective phase. Now this is a motive wave. These 5 subwaves, this is a motive wave because the larger wave, okay, this is a corrective wave down. And so its subwaves are going to be per this larger trend, not the overall 1, 2, 3, 4, 5, but just the primary trend that it is inside of. So we have a 5-wave motive wave followed by a 3-wave corrective phase. Okay, 1, 2, and 3. That takes us to B. And then we have another 1, 2, 3, 4, and 5-wave motive wave to complete the pattern to C. And the question is, where is C? Where is C going to end? Wave 5. How far can we go? It's kind of hard to know, right? But if I turn on my chart pattern analysis, I think it's going to become really clear. It's probably going to come down to about $11.86, maybe $12 before we see another bounce. And there's going to be some significant horizontal support and resistance right here. And so I would say that moving into Monday morning, I'm going to be looking for a dip. I'm looking for a dip. And whether or not we get a reversal intraday or off of the open or in the end of the day is going to determine what that daily candle looks like. And that daily candle is going to define what I believe will be the start of the bullish reversal from this very, very temporary downtrend. And that I am looking forward to. So tomorrow I am looking for something like a bullish hammer. That would be my preference, of course, but it doesn't have to turn out that way at all. Going back to the Elliott wave analysis, I'm just going to go ahead and draw this downtrend to about $12, and that would form a nice double bottom here. And if the price can rise and close above this intermediate high, that would constitute a double bottom and a breakout, and that would also constitute a breakout of this corrective wave down. And then we'd be looking for wave 3. So wave 1, wave 2, and then wave 3 is going to have 5 subwaves because it's a motive wave, because it's part of a larger 1 wave, or I should say a 3 wave. And I've shared a little bit with some people what that third wave is. And if we get some crazy rallies, I'll go into that. Maybe go watch my short squeeze theory video. But here we go. So now I'm going to use my chart pattern analysis to help inform me of how the possible third motive wave could form. I have a target of $14.20 on the pennant. And so when I bring my cursor to that level, that's kind of where I expect the breakout to lead to, is to this point right here. I then expect wave 2 to come down and test a level of support and resistance, which would be right here at the top of B wave. This would be a fantastic place to find support. As the rally continues and a new high is set, we'll have a confirmed bullish breakout, and we'll start moving higher to $16, which I've been waiting for, and we actually had it back here. Now, wave 3 hopefully continues after a small pullback to $18. That's really what I'm looking for, because I have some targets on the daily time frame at that level up here. And so you can see how my pre-Elliott wave analysis guess did correctly forecast consolidation, but did not correctly show where those waves would occur. And that's why I'm so excited, because now moving to the future, I'm going to be able to make much better forecasts. Yes, we consolidated, but in a different range, in a different way than I thought. And now that I have some fundamental understanding of Elliott wave analysis, it's about to get a whole lot better, and I'm really looking forward to that. So I think that's all I really want to say here about the overall trend. Going into tomorrow, I'm going to be looking for a bottom, and if I do see a reversal occur, probably be a really scary initial dive, and then out of nowhere, just an absolute surge in volume sends the price in a complete reversal, and there might be this sweet V-type bottom. If I see some sweet V-type bottom action, I'm going to start trading, and I'm going to start with in-the-money calls. I'm going to be using stop losses, because Bulkowski would not advise trading this as a flag until you get a high above 1. But as a pennant, I'm going to be trading it for a breakout. When it crosses this trend line, I'm going to try to get in early at the very bottom, which is not super advisable. But if I'm going to use an in-the-money call, that shouldn't be too much of a problem, especially if I do catch that bottom. I am pretty good at reading downtrends when they end, so I'm going to be using that perspective and that lens to help me enter a long position. Did you hear that? I'm going to use my bearish perspective, my bearish experience to help me understand when I'm supposed to be bullish. You got to know both sides of that coin. You got to, because the money's in the trend reversals. It's not in perma-bull. It's not in perma-bear. No, that's not right. Life cycles. Okay. You can also see where my cursor is now. There's like a triangle in here. I mean, look at this. Doesn't this look like just like ready to pop? It looks like it's ready to pop, and just a little dip down because we're in a downtrend. To send the price too low just to generate a spring upward. That sounds fantastic. So I'm gonna look for that. Moving into Monday morning. I don't know where the pivot points are. I'm gonna turn them on really quickly. I don't always look at the pivot points. I'm really happy that TD Ameritrade does pivot points. This is great. I'm gonna say add selected, apply, and it ruins my chart. Here we go. So there it is. Maybe we see a dip right here and the 5-wave ends right at $12. Well, geez, that's what my Elliott wave and my pattern study suggested. And now we've got a pivot point there. So that's perfect. That's perfect. At $12, I'm probably going long. And I'm going to expect a surge of volume to confirm that more than anything else. I got to see the volume. If you don't know what pivot points are, I'll go up on Bulkowski's website here and I'll pull up really quickly pivot points. We'll see what Bulkowski has to say, and maybe I'll pull this out too so it's a little easier to see and zoom in a couple times. Pivot points. Testing using intraday data on the 1-minute scale through both bull and bear markets shows that pivots using the standard formulas for pivot points works from 51 to 60% of the time. So that's not like the best, but it's not terrible. He says, and worse, Fibonacci pivots are even less reliable. So yeah, everyone's all like, ooh, Fibonacci. And I'm like, I don't know, because Bulkowski tested it and he's telling me it's not that great. But if it works, it works. You can't argue with the results. So nonetheless, let's go here. So he says pivot points come into being to help floor traders determine support and resistance levels before the trading day began. That allowed them to concentrate on trading instead of number crunching. And so this was obviously generated or an old idea before electronics, computer, and algorithms trading, right? So he says that he found 3 sets of formulas to calculate the pivots, but he'll only discuss 2 of them, and he gives them here, and this looks complicated, but it's not, don't worry. And here we go. He's going to show us some pivot points and how they come into play. Go ahead and go to the website, check this out if you want more. Bulkowski's website, thepatternsight.com. I'm not sponsored by him, but it kind of feels like I should be. He won't, that's okay. I've actually emailed him and he's responded, which is really cool, but he's a busy guy. So I just want to wrap this up. This is my vlog for today. I'm adding Elliott wave analysis to my chart pattern studies, and that is going to really turn up the heat. I'm looking forward to starting trading next week, starting this 3rd motive wave. And with that, I'm out of here. Happy trading.